Isn't this just amazing price action to record episode 46 of the ICT Mastery Mentorship? Defended swings. Yeah, this is, you're going to see why I say that in a minute. Defended swings, in short, is a swing that's defended. But by what, JJ? That's such a vague explanation. Well, since you want to take it farther, it's basically a swing that has just a lot of, I wouldn't say unnecessary, but a lot of price action around it. Okay. Mainly in the form of a consolidation, back and forth movement, but just a lot of activity going around a swing before it, truly moves away from it. Something like, something like this swing here. Oh, I'm on the wrong chart. Hold on. Can't just see my drawings because my drawings are a bit messy. This swing right here. Oh no, all the other examples that I did from the previous episode. I forgot to delete them. My bad. There we go. This swing here would be a defended swing if I have it as, yeah, there we go, a defended swing. Because if you look at all this price action that was before and after it. See that? Just a lot of BS, really. Okay, like I said, it's mainly in the form of a consolidation, in which it doesn't look like a consolidation here, in which it really isn't. But if we were to like draw like some sort of box or whatever, it looks like it's in a range. You can see it way better now. But if you really look at the price action on a lower time frame, it's doing something here, it's doing something here, it's doing something here. It's all, price isn't random. I've taught you this before, you understand that. So since it's so self-explanatory and a defended swing is a defended swing when there's a lot of price action around it, what price will do before reaching that swing is distribute all the accumulated price action that's in close proximity to that swing. Okay. And in close proximity means, for example, the actual run lower that creates this swing would be starting from here. So basically, anything inside of here would be close proximity. Okay. Now, if price, for example, goes outside this range and we start meandering around like up here or something, we see just a bunch of stuff up here. That's still okay too. But if it was like a consolidation, like just a range, very, very rangy type of range, because there's different types of ranges, but this is just pure in a range. If it's like this, then close proximity would be, within this here before it breaks higher, if it's actually staying within the range of the entire swing lower, creating the defended swing. Get what I'm saying? So about the distribution part, you understand distribution. It's simply just expanding. That's it. In which we already accumulated, we manipulated. Now we're distributing. You get it. So pay attention. We have accumulated a bunch of BS price action around this swing here in close proximity to it, in which now, on this day here, October 24th, 2025, on the NAS, we begin to distribute a lot. We distributed 1,434 points in 3 ticks. That's a lot. So I think we can officially say we geez, you can't say that word more than like 5 times in like a single minute. It starts to trip you out. It starts distributing higher away from this swing low. Okay. So now it's not a defended swing anymore. It was defended during this time here. It was defended because we just have all this accumulation here. Just a bunch of BS price action and a lot of stuff that price has to get through. This is time. It has to get through all of this time of price just doing anything. Okay. So the more time it spends doing something, think of it as a concrete wall constantly getting thicker. Like it's just expanding, 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 right? And the more candles you see, the thicker that concrete wall is going to get. And it's going to be way harder for price to get through it, meaning it's going to have to distribute even further before really going to that defended swing, in which we did distribute a pretty good amount, in which we did it pretty fast. Now pay attention to this. We're going to draw this out. I know you see it already. I see it too. I see it too. After we distribute higher, guess what happens next? We start dropping, 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 dropping to that defended swing that was once defended, but it was not defended anymore after this distribution higher. Distributing, you hear what I'm talking about, right? Distributing all the BS price action that was in here. All of that is now been distributed in that run there, creating a new all-time high, in which price is like, okay, time to retrace. And then we treated that defended swing as sell side liquidity, or just causing a liquidity purge. Get it? Now, we might find a good amount of those swings, especially in this price action here for obvious reasons. Well, so let's go ahead and look through that. Here we go. And I feel like there's some things I'm missing about defended swings, so we might go to the compendium in just a moment. Here we go. Let's draw this out. Boom. So this would be the defended swing. It's just a swing high or a swing low that has a bunch of price action around it. That's it. So this is the highest swing high because, if you're looking for a high, you want to look for the highest of the highs. Simple, right? This is the highest of the highs. So looking around all this trashy price action, is it trashy? I think we can both agree that this is a lot of just BS. It's not doing anything. It's just going back and forth, back and forth, back and forth. So when I said mainly in a consolidation, this is what I meant. This is what you're likely going to see a lot. But a bunch of accumulation back and forth, back and forth, back and forth. That's just the what would you even call this? I'm trying to see what would you call this. Like, I'm trying to find out a word for this, but it's just a stupid amount of ugly price action in which price right here at that point began distributing all that price action, delivering what was that? I think it was like 1,200 points. Oh no, I was way off. Just 865 points. So pretty decent. At least it distributed and it sought that low there or rebalanced these gaps there. Okay. I'm not really looking into the balance part fully, but yeah, you get what I'm saying. It's a gap right here until we fully look into this. Anyway, we've officially distributed seeking sell side liquidity. That's one thing it must do, by the way. I forgot to mention that. When it's distributing, it is distributing all the liquidity that was accumulated here at this high here, which is what? Buy side liquidity. So if we want to distribute all the what can I say? If we want to distribute all the longs here, okay, if we're hunting retail or if we're hunting uninformed money's orders, right, and they are buying up here in this area, in this range, they're buying. That this is what's happening here. They're buying, 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 which creates like kind of a battle if the algorithm wants to go higher. So what the algorithm will do, it'll be like, okay, since you want to be annoying, you want to really be disobedient, what we're gonna do is we're gonna run to your stop, which is right there, right? Make that swing vulnerable, then go back up there. How about that? That is exactly how the algorithm acts. Like I told you before, it acts just like a human, just like a human. It acts it acts exactly like a human. You just have to I guess you can say not necessarily sync your emotions up with it, but basically just understand it because it acts just like a human. Once you understand what it tries to do to do what it needs to do, it's very stubborn, very very stubborn. But it's very very nice to you once you learn how it works. So let me find some more defended swings and stop talking about the algorithm. Anyway, that was one. I might drop down to the hourly. Yeah, let's go one more time frame down. Here we go. Yeah, this is just ugly. Yeah, this is horrendously bad price action. Jesus Christ, man. How do you even like deal with this? This is insane. Okay, I think this is a good swing here. This is a good swing. Now, another rule or factor I forgot to mention is that where's the defended swing? Is that the BS price action or just the load of price action that you see on both sides for the defended swing doesn't have to be on both sides. It mainly has to be before it. That has to happen. If there's no sort of just how can I explain just a pack of price action just there before the swing is created, just you see how it's just a pack of price action not doing anything, right? That's what I mean. If you don't see that or some sort of just I don't think I have to keep saying it. You get what I'm saying. If you don't see that before the actual swing, then it's not a defended swing. If you see it afterwards, no. But it has to be before it. It has to be before it. If you have it before it and after it, that just makes it extremely defended swing. Extremely defended. But if you have it before then, it doesn't have to distribute so much for it to reach up into it. In which it does do a little much here. I'm not gonna lie. It does distribute. Let me see. What is that? Like a 300 point. Oh, that's not a lot. What? But as I said, it doesn't have to distribute a lot if it's just a bunch of yeah, that type of price action before the defended swing, which actually makes it a defended swing. I can't call it a defended swing if we don't have this before it. So if we have this before it, that turns that swing there into a defended swing. You get the point. Anyway, we distribute here, in which we use that swing I think during 9:30 on the next day. Yep, right there, 9 o'clock. We use it to purge buy-side liquidity. See that there? We now have a liquidity purge that we used the next day after all the liquidity was purged. I need to stop doing that accent. I do it every once in a while. Anyway, you get the point. Defended swing, real easy. We're going to do one more example. If you want, you can click off the video. Well, hold on. Just give me a second because I think I have some stuff in the notes that I have not gone over yet. So we're going to find one more. Just one more. Yeah, hopefully I can find one because this is some horrendous price action. Like, this is just nasty. Okay, I think I found one. Kind of, sort of. I think I found one. Okay, so right here, you can already see it. I don't need to explain the price action. You already see it. We got the defended swing here. We got that price action on the left side and that price action on the right side, in which we begin distributing higher, distributing higher, distributing higher, distributing higher. We seek this from a buy side here, these equal highs here, and then we fill this gigantic imbalance here. So I think we can confidently say that we've distributed higher and basically did two things that price needs to do before, you know, actually expanding and taking out this low, which was seeking balances and seeking liquidity. We already did that within this run here. So now this swing is vulnerable, right? Is it? I mean, according to price action, it is. It's now sell side liquidity, in which price action really does treat it as sell side liquidity, as we can see here. It delivers uh 600 points once that swing becomes vulnerable. So whenever you see a consolidation or just some ugly price action, look into it. You might find a defended swing in which price may use later. Anyway, this is the end of episode, what is this, 46 of the ICT Mastery Mentorship. And I'll see you guys in the next one. Good luck and good trading.